we all know what that $5 bill would buy you 10 years ago, 5 years ago, a year ago, 6 months ago is vastly different than what it will buy you today. Vastly different. You can't make this stuff up. They're trying to transmit this information so that those at the top would get out and reposition, and they are. They're repositioning into gold, into Rolexes, into, just heard a report this morning that something like they've tripled the amount of super yachts that the wealthy are buying. I don't know, how many super yachts do you need? Let's not talk about the fact that the average senior CEO pay is 380 times the average worker, when, gosh, in 1971, it was 20 times, right? But now these employment gains, I mean, once you give people raises, can you turn around and take them away? No, inflation is here to stay, and it's going to get worse. But those poor corporations, because how these pay increases may very well hurt some of their profit margins, which, by the way, are like screaming high. Now, generally, if wages are increasing, well, that's good, because then consumers are going to go out and spend more, right? Except when inflation is rising way faster than wages, you know, they just can't do it. Does our central bank understand this? I don't know. The inflation effect on consumer spending, it's really kind of a little bit hard to see, but consumption actually declines as prices rise. Now, it'll show GDP going up because, hey, if that banana costs you $20 and you got to have a banana because you've got to eat, well, then that goes into the GDP. How convenient. And that's going to be interesting to see. How much has the GDP grown? Has it grown faster than inflation? Because that's a big component. But this is a consumer-driven economy. And if consumers can't consume, or what ends up happening during hyperinflation is whatever income they get, whatever money they have, has to go to the absolute necessities. Food first. Food first. Food becomes the single biggest issue for people. By relentlessly depriving investors of risk-free return by dropping interest rates to zero and pushing all that money into the system, the Fed has spawned an all-asset, except for gold and silver, by the way, speculative bubble that may now leave investors with little but return-free risk. You are not getting paid for the risk that you are taking, whether you are in the stock market or the bond market, or dare I say it, the derivative market that you don't even realize that you're probably in. Depends on what you're holding. But valuations still stand near record extremes, even after the week that we've had with these massive gyrations in the markets. And when the public loses all confidence in the system, that is when hyperinflation will become apparent. So we know the insiders are selling, and what are they doing? They're buying gold, they're buying hard assets like real stuff that is out of the system.